You know, for 3 years now, we've been hearing the same thing over and over. A housing crash is coming. It's right around the corner. But what if all those predictions were looking at the wrong map, especially when it comes to us here in North Texas? So let's dig into the real numbers and figure out what's actually happening. So it's almost become an annual ritual, hasn't it? Every single year, the headlines just scream about the real estate apocalypse that's on its way. In 2023, they said it was coming. In 2024, they were absolutely sure of it. And by 2025, they were doubling down. But the crash just never showed up. In fact, something totally different happened. Instead of a big nationwide price collapse in 2025, we got this number, a positive 0.7%. And that one number right there just shows you the huge gap between the doom and gloom headlines and what was really going on. Now look, it's not a massive gain, but it's the literal opposite of a crash. It proves the whole story that we've been told was way off base, and it makes you ask a totally different question. What is actually happening in the market? So here's the game plan for this explainer. We're going to look at the data behind the crash that never was. Then I'll introduce you to a new idea called the Great Housing Reset. We'll dig into why DFW is such a unique market, see what the real experts are predicting for 2026, bust some of the biggest crash myths, and wrap it all up with a clear playbook for anyone out there thinking about buying. All right, let's get into it. But first things first, let's ground ourselves in the facts. What really went down here in Dallas-Fort Worth last year? Well, just take a look at these numbers. The median price in DFW was basically flat. It was down less than 0.5%, which is basically nothing. But get this, the average price actually went up. Now that tells you the higher end of the market held up just fine. And even more interesting, the total dollar amount of homes sold grew by almost 6%. And the inventory, 4.7 months. That is the textbook definition of a balanced, healthy housing market. This isn't a picture of a market in a nosedive. This is a market that just tapped the brakes to catch its breath. This wasn't a crash, not even close. It was a correction. So okay, if it wasn't a crash, then what in the world was it? Well, this is where a new term comes into play. One that a lot of institutional economists are starting to use to describe this new phase we're in. And this right here is the absolute key takeaway. We've just lived through the Great Housing Reset. We've basically shifted gears from that crazy, unsustainable rocket ship price growth of the pandemic years to a much more normal, modest, and honestly, a much healthier market. This isn't a downturn. It's the market building a new foundation for the next chapter of sustainable growth. And that reset is exactly why the DFW area isn't just getting by, but it's actually set to thrive. You see, our market has some pretty unique structural advantages that you just don't see in other parts of the country. This chart really shows you that DFW isn't just one single market. It's a bunch of mini markets. I mean, look at Rockwall County, a total outlier that actually saw prices go up over 6%, mostly because of executive demand and not a lot of land. The core counties, Dallas and Tarrant, saw really small, modest corrections. The biggest reset, well, that happened in the big growth areas like Collin and Denton. And in the more affordable markets like Kaufman and Hunt, where prices were the most sensitive to what middle-class buyers could actually afford. It was a targeted adjustment, not some blanket collapse. And when you zoom out and compare us to the rest of the country, DFW's advantages get even clearer. Our median price, it's more affordable. Our supply of homes, we have more of it, which gives buyers more choices and frankly, more power to negotiate. And here's the real kicker. 30% of our market is new construction. That's nearly double the national average. This lets our builders offer things like mortgage rate buydowns, which keeps the whole market moving even when things get a little tight. And holding all of this up is just an absolute economic powerhouse. We're talking over 120 corporate headquarters have moved here in just the last 5 years. We added tens of thousands of jobs just last year, and more growth is expected. This constant stream of people and jobs creates this incredibly strong floor of demand that just doesn't exist in a lot of other places. Now look, don't just take my word for it. Let's see what the major institutions, the people who study this stuff for a living, are actually predicting for the year ahead. What you're seeing here is pretty much everyone singing the same tune. The National Association of Realtors is the most optimistic. They're calling for 4% price growth and a huge 14% jump in sales. Others like Zillow and Redfin are seeing more modest growth. Even the most conservative local forecast sees a massive 10% jump in the number of homes sold. I mean, do you see a crash anywhere on this slide? Nope, me neither. What you see is stability and a return to growth. And here is the potential fuel for that recovery. The general agreement is that mortgage rates are going to stabilize, maybe even dip a little, landing somewhere around 6% for 2026. And this is a huge deal. Why? Because every quarter point that the rates drop, millions of potential buyers get off the sidelines and jump back into the market. We're already seeing mortgage applications surge as rates have started to come down. And here's something else to keep on your radar. We're expecting a new Federal Reserve chair in May. If we get someone who's more inclined to cut rates, that could lead to even more aggressive action, which would only add more fuel to asset prices. And that includes real estate. It's just another potential tailwind for the market. Okay, so if all the data is pointing in one direction, why do we keep hearing these crash predictions over and over? Well, let's just tackle the most common arguments and dismantle them piece by piece. Look, a 2008 style crash is just not in the cards. The market today is built on 6 incredibly solid floors of support. Homeowners are sitting on record amounts of equity, lending standards are really tight, and our economy keeps creating jobs. Then you have this lock-in effect. Millions of homeowners with these crazy low 3% mortgages have zero reason to sell, which keeps the supply of existing homes tight. And maybe most important, without widespread job losses, you just don't have the wave of forced selling that caused the last crisis. Okay, this is the big one, right? This is the one that we all hear constantly. If prices are so unaffordable for the average person, they just have to come down. It makes sense on the surface. Well, the reality is a little bit more nuanced than that. See, the market right now isn't really being driven by first-time homebuyers. Their share is at an all-time low, just 21%. The market is being driven by repeat buyers, people who are rolling huge amounts of equity from their house that they're selling into the one that they're buying. And while affordability is still a real challenge, there is a little silver lining. For the first time in a while, wage growth is finally starting to grow faster than even the home prices, which is slowly helping to close the gap. All right, myth number 2. The argument here is that a huge flood of homes is going to hit the market, overwhelm all the buyers, and just send prices off a cliff. But again, the actual data tells a very different story. Like we saw, DFW has about 4.7 months of supply. That's not a flood. That is a balanced market. For a real price crash, you need a massive oversupply, something like 8 to 10 months of inventory. That's when sellers start to panic, and we are nowhere close to that. And a big reason why is that lock-in effect that we just talked about, which is keeping existing homes off the market. All right, so we've looked at a ton of data. We've busted some of the myths, but what does all this actually mean for you? Well, if you're out there thinking about buying a home in DFW, here's how you can turn all this information into a real plan. So here it is, your playbook for 2026. Number 1, stop waiting for a deep crash. All the real structural data says it isn't in the cards. Number 2, you need to recognize that this moment, right now, with more homes to choose from, stable prices, and falling rates, is the window of opportunity. You have more power to negotiate right now than you will when rates drop even more, and a flood of other buyers jumps back in. And finally, this is the most important. The best time to buy a home is when it's the right time for your life. Remember, you can always refinance an interest rate down the road, but what you can't do is go back in time to get the house that was perfect for you and your family. So the final takeaway is this. The great housing reset has already happened. We are now moving into a period of healthier, more sustainable growth, and DFW is structurally set up to lead the way. This unique environment that we're in, with balanced inventories, stable prices, and falling interest rates, is the opportunity that so many buyers have been waiting for. The only question left is, how long will that window stay up?